Hello, everybody. Welcome to Monday. The S&P 500 was up 0.4% today. A lot going on today, actually. We had a survey that came out of economists in Bloomberg that talked about 3/4 of the economists surveyed said that they feel there's less than a 50% chance of a recession coming up, which is remarkably different and better than it was just even a couple of months ago. And so we got to be careful when we're investing, in my opinion, of kind of looking at these projections. We had a couple of Wall Street analysts who did quite well last year that were apologizing today about what was happening this year because they were projecting the market to go down. Based on these kind of normal metrics, the market should be going down when you raise interest rates as much as we have, and the yield curve gets this inverted. We should have some type of downturn and recession, but the pandemic and the different things that are happening, have probably offset that. So I really been advocating kind of a reactionary measure for investing. So instead of trying to project, okay, we're going to have a recession and make these moves into some conservative area, and then find out that that's not the area that grows, and you either lose money or underperform the market. Much better, in my opinion, to kind of have, like we do, a big list of ETFs and kind of watch for what's moving up and kind of capture those waves, because when things get poor, the things that are moving up will be the defensive things, that high dividend paying stocks, utilities, the T-bills, those types of things. And when things are good, you'll see more of the higher aggressive growth type things going, like the tech stocks, like we've seen the last couple of months. So you just want to kind of ride those waves as they happen, and get off when that wave dies and get on the next one. And that's something we've been advocating since we started this video series back in 2020. And so we also had, the rebalancing on the NASDAQ 100 today before the market opened. So they're taking and selling off, some of the big stocks that gain the most and buying some of the other stocks on that 100 stock index. These are the 100 biggest stocks on the NASDAQ index altogether. And so we did see a sell-off in some of those big stocks last Thursday, but we didn't see any impact today, really. Matter of fact, the QQQ, which is the ticker symbol for the NASDAQ 100, if you want to buy it as an ETF, was actually up a little bit today, almost 0.2%. So that turned out to be a non-event, which is a good thing. So obviously, coming up here, we have the Federal Reserve coming out on Wednesday. I think that will actually sort of be a non-event too. It's a 99.8% probability right now, according to the futures market, that we'll have a rate increase of 1/4 point. They'll probably come out and say some aggressive things. Maybe the market reacts a little bit to that, but I don't think it's going to be a big issue here as far as that goes. We're seeing, some slowdowns and softening into this kind of soft landing, enough that it looks like the Fed could pause raising rates after this increase here just on Wednesday. We'll have to see how that plays out, but the next meeting isn't until September, so we'll see what happens then. So anyway, that's what's going on. Still a good time to be in the market's still doing well, very close to our high for the year today also, so that's a good thing. Again, I kind of expect things to settle in a little bit and not be so hot on the upside, just because we're in the middle of the really big earnings season. Microsoft reports after hours tomorrow, for example. You have, I think, $27 trillion worth of worldwide companies reporting earnings over the next week or so. So it's worth kind of hanging in there and seeing how this plays out. Sometimes earnings season has been really good for the market because companies keep beating these low expectations, but it can be kind of volatile sometimes too. So we'll wait for this to run through. So anyway, that's what's happening today. Look forward to talking to you tomorrow. Thank you.